First of all, could you explain the background of FinAccel's decision to choose VPC Impact Acquisition Holding 2 and the main reason FinAccel wants to become a public company on NASDAQ? And also, can you tell us why you decided to go through this back route?
Sure. No, all great questions. Look, I mean, we've known the Victory Park Capital team for quite a while now. This is not our first engagement with them, Aline. We've in fact been working with them now for close to a year and a half, from the beginning, from when their due diligence on us started for a credit line. They're actually one of our largest credit facility providers with about $200 million already committed to us. They know the company very well. We know them very well. We have a lot of respect for them, and I think they have the same for us. So I think when the opportunity really came up, it was a very compelling opportunity, right? For us, the goal was not necessarily to go down the SPAC route, but I think when you look at the advantages of the SPAC structure, which is that it allows you to go public relatively faster than a traditional IPO route. It gives you pricing and deal certainty right at the beginning, unlike a traditional IPO where your pricing and your investor base is not fixed till the end point. Here, right, your pricing gets finalized and you actually have to raise what is called a PIPE, which is generally, invested in by high quality institutional investors. So I think the ability to go public faster, raise a very large amount of capital in one go. In this case, in our case, we intend to raise more than $400 million combined between the PIPE and the public trust. And last but not least, the certainty around the deal is what really made us go in favor of or go in this direction. So in summary, this was less about wanting to do a SPAC. We were happy to stay private. We could have stayed private. I think we've had multiple offers to stay private, but given all the considerations, our comfort with VPC, the ability to raise so much capital with so much certainty, and also look long-term the benefits of going public, I think all of those came together at the right time to make this decision.
Okay, speaking about the startup landscape in the US stock exchanges, we know that it is rare for the technology companies from Southeast Asia to list their shares in the US stocks exchange. Can you share with us the challenges and the opportunities of that?
Sure. Well, first of all, it is rare for a reason. It's not easy to list in the US. There is a reason that the US is the deepest capital markets in the world. Between the New York Stock Exchange and the NASDAQ, you're looking at what is the largest public markets anywhere in the world. And there is a reason that some of the world's largest, best companies choose to list in the US, right? You get access to very deep capital markets, which you just don't get in most other places in the world. Now, that also makes it significantly harder. I think, first of all, I'd like to call out that the reason that you find very few tech companies, right, or startups from this region listing in the US is that Southeast Asia is still very early as far as the startup ecosystem is concerned. There are a very small number of companies that are generating, let's say, more than $100 million of revenue per year. If you're thinking about a listing in the US where you get a high quality institutional base, analyst coverage, right, and the ability to raise a large amount of capital downstream, you need to be at least kind of at that size. And the fact of the matter is that there are very few companies in the region who have reached that size, simply because Southeast Asia is still a very early stage ecosystem. And secondly, given, I think, the fragmentation and the diversity in the region, it makes it that much harder compared to, let's say, India or China to go build a very large business out of this geography. We would not be thinking about going public if we were not expected to cross more than $100 million of revenue this year, right? So given that we have, this became an attractive opportunity. And like I said, that's actually the reason that very, very few startups from this region have gotten to that point. But we think that will change. Now, in terms of the opportunities of going public in the US, look, I mean, these are the deepest, most advanced capital markets, right? There is some of the largest, most well-known, most respected companies in the US, most respected companies in the world, wherever they are based, right, choose to, if they can, list in the US. And that's just because of the depth and the sophistication, the very high standards of regulatory compliance, right? So in general, look, I mean, our view was that this is the right thing for us. And we hope that we can set a good example for more companies to also consider that. Because if you're able to do it, it sets a very, very, very high quality bar for the company, right? Not just in terms of its financials, but also its audit, regulatory, and compliance practices.